Waaree Energy, India's leading solar module manufacturer, is looking to tap the equity market and raise about 4,300 crore at a valuation of 43,000 crore of market capitalization. So to talk more about the prospects, the IPO, joining me is Mr. Hitesh Doshi, Chairman Managing Director, and we have Sonal Shrivastava, CFO of the company. Thank you very much, Mr. Doshi and Ms. Shrivastava, for joining in on our special show, IPO KYC. So my first question is that there is concern about oversupply coming in from China. China dumping solar modules, which has put a lot of pressure on pricing. So what is pricing today?
Thank you very much, first of all, for inviting us and giving this opportunity. Let me first tell you what is a solar panel. This is to generate the solar energy, and you are buying it for 25 years with a 25 years warranty. So when we are buying the product for 25 years to generate the solar power every day, of course the price is important. The first thing is important, the performance of the product. So when we come back to the Waaree, we started in 2008 supplying the solar panels. So solar panels on the ground, they are performing for last more than 16 years now. So the first thing comes the quality of the solar panels, and then there are a lot of other things. The bankers are financing these solar panels up to the 70% of the project cost. So there are a lot of tests, a lot of certifications, and customer has their own also a lot of due diligence. So the price comes after that. Coming back to the oversupply from China, yes, it is true today that China has increased their capacity, anticipating to continue to take over more than 90% market share globally. But as you know that the energy security subject became a very important after the COVID era. Every country, every place now, they want to produce their solar panels in their country. At the same time, they want to have the alternate supply chain.
Yeah.
So the price now came to the third. The first was quality reliability, the second was energy security and alternate supply chain. And the next thing comes on their trust and confidence on the suppliers. So again, price has came down to the fourth level. With all this, countries are coming with their own steps to develop the manufacturing in their country. Like in India, we have now the ALMM, which stops the complete import for more than 90% of the applications in the country, and we need to make the solar panels in India. Apart from the 40% duties on the solar panels and other barriers. Same thing, we go to the world's second largest market, which is United States. It is again impossible to buy the solar panels from China due to the various tariff and non-tariff barriers. So Chinese oversupply or prices, if you put all this together, it is nowhere on the table today.
Fair enough, that's one aspect. But as an investor who's putting money in, they would like to know the prospects. So if you could just give an indication, because your RHP says that the global price of solar modules hit a peak of 23 cents and it also hit a trough of 9 cents, a historic low. So that's a wide variation, and that impacts the kind of return you will make. So where are prices today?
Let me again go back to the entire chain, and that will give them more idea. When we started the solar, started discussion about the solar in the organization, from instrumentation we wanted to divert into the solar. The price of the solar panel was 400 rupees. When we really started in a 1 year producing and shipment, the price has came down to the 250 rupees. Today in India we are talking about a 15 rupees. So there was always a historic low every year, right? So technology is evolving, production is increasing, and this is a market dynamics. It has been there. What is the advantage of this? When the 250 rupees was the price, probably nobody was talking about the solar. At today 15 rupees, we are talking about how the every roof in this country or area, how we convert into the solar power plant. So if the prices are dropping, it is helping to grow the market.
Fair point. Ms. Shrivastava, if you could help us, answer that question on pricing. So one, where are global prices? And secondly, as Sir was telling us, that there is protection from the government in the form of the approved list of module manufacturers, ALMM, plus there's customs duty of 40% on solar modules, 25% of customs duty on solar cells. So there is protection. What is the landed price of imported solar module, and what is your own selling price?
See, if you look at my results of March and June, the average price is ranging from about 20 to 23 cents and about 19 for the quarter. But, and of course, the landed price from the Chinese is much lower. However, what you will also see is there's a margin expansion. So we continuously focus on the cost, and that's a drive in Waaree Energies. And our margins, if you see, has climbed up from 6% 2-3 years back to all the way to about 15 plus in March. And in June, we've reported 18 plus. So that's a focus, we have to manage costs. We have to manage it with respect to pricing, and that's what we do.
What would Chinese prices be?
Chinese prices today are around 11 to 11.5 cents. On this, of course, you have to add the freight and you have to add the duties. The landing price was not more than, last 10 years history I'm talking about, not more than 2 or 3 cents for the end customers.
So talking about your financials, so last year you had a very solid growth of I think close to about 68%. But in Q1, revenue growth moderated to 2.5%. What was the reason for that?
See, we continue to focus on expansion of our module sales. We will do that. The prices did soften a bit. However, like I said earlier, we focused completely on our margin. So in spite of a revenue growing 2.3% odds, our actually costs grew less than 1%. And therefore, it helped us in the margin expansion. I think as we go along, that's going to be our focus. How do you, and with technology, we do expect price points to evolve, and so will the cost.
So since the focus is on margin expansion, your margins today stand at closer to 18%
correct.
around. What is the goal with evolving technology, improving efficiency, value addition, etc.? Where do you think you can take your margins?
We will see how it evolves. I can only say that we have certain strategic direction which will help us on the cost, especially with our own modules coming on, cells coming online. And as we expand there, our own US expansion coming as well. And a good mix of export and domestic, I think margin expansion will play out.
Okay, so margin expansions should continue from
we will continue to focus on our costs, so that's where we will get at.
What is cost today? What is the cost of production per unit?
Cost of production today is ranging about 15 cents to 16 cents.
And you sell in the market at?
It's a higher, so for the quarter it was about 19 to 20 cents. And it was, you will see both costs and prices were higher last year. So as it evolves, both like I said, we focus on the gross margin. So as the price evolves, we also look at how we will manage the cost.
And how has your cost of production come down because of technology? So today you gave us a number. What was it, say, a year back?
A year back, of course, it was higher. It was ranging more around 18 to 19 cents. Also because of input prices, So they really move in tandem, and it all depends on how we are managing that, both from sourcing point of view, as well as efficiency on the production line.
Mr. Doshi, exports, right? You are, I think, India's leading exporter of solar modules. But exports, as a percentage of your overall revenues, has been very volatile. 1 year it's 68%, then it goes down to 23%. In Q1, your exports dropped 54%. Explain that to us.
Like Sonal ji said, as you know, we have a very large order book, and it is constantly growing. So when you're focusing on the margin, you have the choice to choose on the orders, and when you have the large order book. So that luxury of the order book gives us the opportunity to choose time to time which order is good for the organization and good for customers also. Sometimes customers have the challenge of executing the project or they delay the project due to the certain issues, or at that time you get this opportunity to choose the orders. Domestic, it is ranging between 17 to 25% quarter on quarter. And that again, if you choose a more export in this quarter, your market share in India comes down. So you choose more local.
But export margins are higher.
At this moment, yes.
How much higher?
Around again 300 to 350 basis points.
300 to 300. So let's talk about capex. As I can see, I think you have 3 levels of capex coming on board. There is a solar cell coming up in Chikli, you've got US, and a large one in Odisha, 6 gigawatts. Just tell us all your capex plans.
The cell capex, it's ongoing, and it should be completed in the, in the current fiscal.
Q4 of this fiscal year?
Yes, yes.
And the size?
The size is about 2,500 to 2,600, and it's coming to an end. It has been funded already. We are looking for a capex of additional 9,500. 500 is for the US operations, and 9,000 crore is going to be for the Orissa operations, which will be an integrated facility of 6 gigawatt module, cell, and wafer ingots.
And all this, so you said the Chikli one, solar cell in Gujarat, comes on board in Q4 of FY25. What about US and what about the Odisha plant?
So US also, we will be putting it on stream this fiscal as well. The capacity will be 1.6 gigawatt for US. This is the first phase. And for Orissa, we are targeting about 2 years, so fiscal 27.
So once, Mr. Doshi, by FY27, all your capex should be completed, right?
Right.
At least as of the visibility that we have today. I know you're constant. Okay. So your capacity today is, I think, a little more than 30 gigawatts.
Yeah.
What would that number go up to by FY27?
It will be 21.
21.
In the modules. Cells will be 11. Ingot and wafers will be 6 each.
Okay. And today you have no solar cell manufacturing capacity. Everything is imported.
Right.
Okay. So that's...
We buy the domestically also.
Sir, but you're adding a lot of capacity. From 13 you go up to 21, but your capacity utilization is only 45%.
Right. Let's see how Waaree is working. Waaree has been always ahead of the technology. Even in the last exhibition we were the first in India to introduce 730 watt module. So when you're constantly changing the production lines, you're coming up with the new products, you're not able to utilize the capacity which is normally 60-70%. So if you look to some of our lines, they are above 70% today. Some of the lines we are changing the equipment. We change our equipment continuously to give the latest products offering to our customers. And not only the product in terms of the output, but the technology, reliability, longer the life. And that definitely brings some pressures on the capacity utilization.
Fair enough, got that point. So out of your total capacity of about 13 gigawatt, currently what percentage of it is upgraded to the latest technology?
Almost 90% plus. For example, we don't have the line.
Then you should be operating at higher capacity utilization.
The capacity expansion is so fast. We moved from poly to the mono.
To top car.
Till we stabilize now top car. And the module we launched in the last exhibition is HJT. Okay. Right? And it's not full stop there. Our team is already working on what's next to the HJT. And
so
this will keep on coming.
Capacity utilization should stay at these levels in a business where technology is constantly adapting and improvising, or is there scope to push it up to 60-70%?
It's very good scope to push to the 60-70%. Probably you will see in the coming days. Yeah.
You will see capacity rising. So that should further push up your margins and the kind of top line that you do. So your annual report also states that the group company is planning to set up a 3.5 gigawatt lithium ion cell plant. Can you tell us under which listed entity will this be in, and give us some timelines and what your plans is, because this is public. It's a part of your annual report which you've shared with all shareholders. So they'd like to know a little bit more. And will it come under Waaree Energies?
As a company or as a group, we are committed for the energy transition, and we'll continue to grow into the new technologies, new products. If you look to, we won recently for the hydrogen PLI also, and we had bidded for the battery PLI also. So we'll continue in a complete energy transition. It looks a solar company, but if you look to the annual report in detail or our RHP in detail, we are working in the entire energy transition space. Because we strongly believe this is, the Waaree is committed, whatever the electron we are seeing in the electricity here, it has to come from the green energy. Batteries will definitely come. Now which company, when, the time will speak about that in future.
So you haven't decided it will be housed under which?
Not at this moment.
Where do you think it makes most sense?
Not decided anything. Probably post IPO, we'll talk to our team, our investors, bankers.
And any timeline?
As I said, we had already applied for the PLI and will continue to, and we are working on this direction.
What is the total capex in terms of an amount between the 3 plants, and how much is yet left to be funded, and what will it do to your debt?
Yes. So we are looking for funding 9,500 crores, as I mentioned earlier. And the IPO proceeds are mainly for that. And since this capex is going to be spent over the next 2 years, we are looking also to the internal accruals. However, we have also tied up debt for this Orissa plant.
Okay, so what is your debt currently, and what would that number go up to, and what's the debt that you've tied up?
We are a debt-free company on a net basis because my total debt is about 300 crores, whereas I'm sitting on a cash of about 3,600 crores. So in that sense,
okay. So what's the debt that you've tied up for?
So we have tied up about 5,000 crores plus for this new capex. However, we will see how much we will draw down in the next 2 years, and we will be conservative and very much in line with what our past ratios have been.
Your last round of funding, I believe, was done to ValueQuest. This was last year?
Right.
Okay. What was it done at in terms of evaluation?
We were done at that time at 4,500 crores. This was not last year. This was 2 years back.
2 years back.
Yeah. Last year we raised another 1,000 crore. So the 2 rounds has been done already.
And even last year's round was done at
13,500 crores.
So 2 years back, your valuation was 4.5. It went to 13,000, and now you're coming to the market with 43,000.
Right.
Thank you very much, Mr. Doshi and Ms. Shrivastava, for joining us and speaking to us.
Thank you very much for giving this time and opportunity.
And thank you for giving us your first interview.